everybody. So this would be your broad I say your broad information, your trade ideas for this upcoming week. All right. As you can see, it's 619. Boom. I got the right screen share. Let me make sure I'm sharing the right screen. Boom. All right, yeah. Cool. Got the right one. All right, boom. So I found this trade on the week. So we're going to start on the week. Basically, what I'm looking for is a 2 up, 2 down reversal. All right. As you can see right here, boom. Hopefully y'all can see this. Um, as you can see, it would be this 2-2 reversal bearish. I know this candle is green, but that doesn't matter about the color. So as you can see right here, right behind it, boom, 2 up. That's what it did, 2 up. The entry is the bottom of the candle. Boom. The target is the candle right before it, but obviously the candle right before it, they're almost the same. So I'm shooting for the bottom of this one. And then the next price target after that would be, 318, the bottom of this candle. I don't know if Facebook would drop that far, but that those are my two price targets. Oops. So let me draw this other one. Boom. Edit properties. Second PT. PT. And then change that red. So, I also need to change that to week. Edit properties. WK. Boom. So I know a time frame. So when drawing the broad informations, all right, all you're looking for is where price made a lower low and then kind of like went up. All right. Basically reversed. So you have one right here where price was kind of, and it looks more like sideways action, but it drops down, makes a lower low, takes out some of these pivots. What is a pivot? A pivot is that obvious place people place their stop loss. All right. Why does that matter? It matters because it hitting that pivot contributes to your cause, right? What happens is price likes to, and this is basically why there's a broad information. Price likes to take out one side of range and go out and take out the other. But in doing that, what it's doing when it hits a pivot, right? So if somebody was long here and they start their position here, they're putting it at the bottom of the candle, right? Because that's where most people will put their stop loss. They're not wrong until you break below that level. So what happens when you break below that level and they're long, it basically turns them into sellers. So where there were already sellers trying to push the price down, it hits the people who are long stop loss. Now they become sellers as well, which helps push the price down even more. Same thing can be said in the opposite, right? If somebody was short, they're going to put their stop loss at the top of the candle, right? That's how you prove their hypothesis is wrong. So what happens when you hit somebody who is short stop loss? It basically adds buyers to the market because now they have to cover their positions. That's why we like with Stratton, we like to go through a previous range because we know that we're hitting people's stop loss, which is helping accelerate us going up. That's why we don't really like to trade all-time highs and stuff like that because you don't know when price is going to reverse. And as you can see, Facebook all-time high is 339.92. So you don't know how much further it's going to go above that. That's when you start looking at analyst price targets and stuff like that. All right. So boom. So the first, like I said, first broad information, this lower low, boom, back to here. That's the pivot that it took out right there. And then it goes up. As you can see, that's the high. You draw back to a previous high, right? And then price came down, took out this pivot, and then returned back to the top. So that could act as a support, right? Because that's all the broad information is showing you support and resistance. We know support and resistance isn't horizontal because a lot of times you'll be like, oh, my support right here. And then it breaks below it just for it to come ripping back through that range. It's because support and resistance isn't horizontal. And that's what we believe in the strat. All right. So this can be a mini broad information within this larger broad information acting as support because you see it bounced here, goes back to the top. All right. So if I go down to the daily, because I like to see if I can, actionable signals on multiple time frames. And I think on here, you can already see that Facebook already reversed. It already did a 2 up, 2 down reversal. If I zoom in some more, this broke this candle broke the high of the previous candle. So boom, that's your 2 up. Here's your 2 down. So it already did the infamous 2 up, 2 down reversal. So what we're waiting for is for it to trigger the weekly for us to hop in. Because really the trade, you could have hopped in, you could probably say right here, 2 up, 2 down, but also on the 4-hour. This is why we analyze multiple time frames. Here's your 2 up, 2 down reversal. Boom. Even though it gapped down, it tried to come up and fill that gap. And once it tried to fill in it and return back down, you could have hit the trade. Or if you don't want to look at the 4 hours, the 4-hour, the reason why I like the 4-hour, all right, not to be too long-winded, because I want to work through all these. The 4-hour splits the day in half. So as you can see, when I'm hovering over it at the bottom of the screen, you see it says 12:30. If I go to the candle right before it, it says 8:30. And as you can see, a lot of times the bigger candles are the 8:30 candles because that's the first 4 hours of the day. All right. So it kind of divides the day in half. And then as you can see on the 1 hour, oops. Golly. You already had your reversal. So 3, 2 up, came down, 2 down, boom, been going down. You could have, hopped back in when it did this 2, 1, 2, boom. All right. So that's Facebook. I'm looking at the 325 puts. All right. Again, 325. That's what I'm gonna be looking at. And like I said, y'all see the price targets. Also, what I preach to y'all, go over to the send the contract over to the analyze tab by right clicking on it. Right click, analyze by single, and then boom. I think that if this breaks, I think Monday, because I've played Facebook before and it did the whole move that I was expecting it to in 2 days. All right. So if I put, is it 621 on there? And if you didn't know, the bottom is the price of the stock, the top is the price of the contract. So for puts, obviously, instead of it going up, you want to go backwards because that's where you see the increase in contract price. So let's say Monday, Facebook at least hits this one, this 323, right? Analyze. If it hits 323 Monday, let's just say, what was that? 323.48. Analyze. 323.48. You would be $194 profit, which is the price of that contract. Is you probably get it on the ask, but you could probably try and get it for $3, maybe 2.95, or try 290, right? Because it is a little bit of a spread there. 290, that's over. That's not 100%, but that's at least over 50%, right? That's like at least 70, 80%. So that's a good trade. That's a day trade, 70% right there. So that's kind of like what I'm looking at. I don't know if Facebook will dump the whole week, right? It might just dump Monday. You know what I'm saying? That's why I'm just shooting for right here. I'm being modest with this one, all right? Because it might be low volume this week. The next one is Snap. Now, Snap, I didn't find it on the weekly chart. All right. I'm looking for puts on Snap, but who knows? All right. This could technically end up being a 2 up, 2 down reversal. Don't know. We'll see. Because it did close right here. So, but I found it on the daily and the 4-hour. So what I'm looking for, again, 2 up, 2 down reversal. All right. So entry right here. This, the entry on the daily. Entry, daily. Oh, entry puts. Boom. Now, also right here, if I was to draw my broad information, as you can see, like my eyes go right to it. Here's that high, that peak. So boom, draw back from here. I could draw to here, or I could draw back here. Some of it's just like how you want it to see. Low right here, draw back to there. And also if there's a smaller broad information, because technically price did reverse from right here and go back up, I could just draw from here to here. That might be a broad information within a broad information that it respects on the like the lower time frame. Go to the 4 hour. As you can see, the 4 hour kind of respects it. It's kind of like been in this little range. As you can see, broad information right there. So you can draw the broad information on any time frame. You know what I'm saying? I pay attention to the bigger time frames, but you can also draw them on the smaller time frames. But basically, on the daily, you have your actionable signal. You have your 2 up, possibly 2 down, right? And then right here, you have your 1. Oops. I'm trying to use the wrong drawing tool. So you have an earlier entry. Like I said, mark both sides just in case it ends up being calls. You have an actionable signal on the 4 hour. So I'll put entry, 4 hour, and then boom, edit properties, entry, puts for, I'm supposed to put in parentheses, 4 hour, boom. All right, boom. So you have your earlier entry. It could open up, immediately hit that, boom, write it to your daily entry, boom, write it to your price target, which the price target for this one, I'm just gonna, like I said, this might just, I'm looking at this more so like maybe a Monday day trade. But the first price target was right here. If it goes below that, just continue to go down and mark. But I don't know, you know what I'm saying? If it's gonna keep dumping, you could say it already hit the top of the broad information. But like I said, this upcoming week might be low volume. I just want to give y'all some trade ideas to, look at. So first PT daily, boom, make that red. So boom, hits that. Then, like I said, just for illustration purposes, I can just, because this is a little bit lower. So boom, you can go boom, 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 boom. You know what I'm saying? So, and then like I said, if it just keep going, keep marking. But like I said, be modest and also take profit. Now, let me remove this, remove these. I'll leave that one. I'll say second price target. Because if this stuff move, you know what I'm saying, you can be done for the week if it all moves on Monday, because puts kind of go quick. Then the contracts that I'm looking at for snap puts is like the 60 put or like the 62. And then so if I go over here, and I think you're gonna see a bunch of volume. I think I already looked at the contract. So like the 60, look at that, 29,000 open interest. Let's look at the call side. There's no 29 anything open interest. So well, here go 24 for 66. But it's probably going to, more than likely what happens is they want to you got to pull back before you go for it. So what happened is the price will pull back, right? Drop down just to reverse and go for it. That's how price likes to move. Come down, knock some people out their position. Now they got to come back and it swings the price back up. Come down, knock some of their people out their position. Now, boom. You know what I'm saying? That's just what you need to move the market. All right. So, like I said, I'm be looking at the 60 put or the 62. So, boom. Here, I would say 61.5, especially if it's a day trade, you can get away with 61.5. But ultimately, boom. But no, 62. I'm for sure going 62. I'm getting confused with open interest. But there's volume. The most volume is 63, 62. 60, and there's a lot of people in there. So when they start unloading their position, that volume gonna spike up, and then this one's a relatively tight bid ask, 0.05 cent. So 60 puts on Snap. Go to the next one. Try to get through this kind of quicker. CRM, puts on CRM. Start on the weekly time frame. I think my signal's on there. Yeah. So boom, what I'm expecting or thinking about if it does it is the same thing, 2 up, 2 down reversal on CRM. All right. Now, if I draw the broad information, how I would draw this one is here, back, or I could draw from here, back if it ends up reversing. Hold up, no, probably be good to put it right there. Boom. So one of these two, right? And then the bottom would be here. Yeah, here to here, because this is just a little bit lower than that one. So boom. Or you can do right here to here for when it reversed. And I could probably go on a lower time frame to find a better one up in here. But ultimately, that's what I'm looking at. And like I said, your broad information is your support and resistance. All right. So that's why you draw them. So if I go down to the, also, let me just go ahead and mark all this up. So that's your entry. That's your entry right here, the bottom of this candle. Again, let me give you the illustration. 2 up. So that's why it has the dotted line. I don't know why the dots are all the way through, but that's your entry, the bottom. First price target right here. So boom. Edit properties. Change that red. Say week. Boom. Edit properties. Entry. Puts. Boom. First price target. And now I would say second price target right here. I don't know if it'll go that low though. But you can always just mark it just to know it. Second PT week, just to keep track of it. All right. Then you go to the daily. Boom. It's kind of already did 2 up, 2 down, even though it didn't keep going down. It kind of went up and closed. But boom, this is also another shooter. So now you have another shooter on the day, on the daily chart. So you have a shooter on the week, a shooter on the day. So boom. So now it's, like I said, actionable signals on multiple time frames helps give you higher probability and more reasons for things to almost go in your favor. You know what I'm saying? To go in your favor. Entry puts daily. Boom. So now you have an earlier entry. Your daily entry is $2 from your week entry. So boom, that's what I mean by having high probability setups. If this triggers, it's going to trigger the week relatively quickly. And then just boom. And then if you wanted to do some daily price targets, you can mark right here, and then mark right there. You have some price targets in between. All right. Then we can go to the 4 hour, see if there's an actionable signal there. Boom, what do you know? Your 4 hour. You have an even earlier entry. You have an inside candle, which also can set you up for if it goes to calls. Mark the top and the bottom. And like I was saying before, I don't know why this isn't snapping like it was before. 2. Open hollows, close. Snap draws too. It's not really snapping like it wants to. All right, but anyways, so an even earlier entry puts 4 hour. Boom. Then you can, like I said, don't be biased. Entry. And well, it already knows calls. Entry 4 hour. Boom. You see what I'm saying? So now you have a trigger on the 4 hour. Let's see if there's another trigger on the daily. And that's what you look for. Just compound them actionable signals. So right here, technically on the 1 hour, there's an actionable signal. Let me go up here. The reason why I say that is because this candle right here, man, I hate when I saw these. Like this candle right here technically is a 2 up. Boom, 2 up, came down. So technically this would be a 2 up. If the next candle goes down, it's a 2 down. This is just a red 2 up. Why? It broke the high of the previous candle. So boom, 2 up. If it continues to break down, if I wanted to mark this, you got a even earlier entry at 242.58. It give you like what? 248.58. That's like a 12-cent head start. Yeah. If I oops, let me cancel. If I marked it, boom. 242.6. Okay, so that's like a 14-cent head start. You see what I'm saying? So that's what you're looking for. Let them actionable signals compound, which technically this 2 up is an actionable signal, but that one on the 4 hour and then the shooters on daily and weekly are your actionable signal. What the contract that I'd be looking at for CRM? Oh, I didn't even look at it. I didn't even write one down. CRM. Like I said, most of this stuff I'm not doing 2 weeks out and stuff like that because I don't know if it's gonna be dumping for a while. But if you wanted to do the other two, Facebook and Snap are like 1 week and weekly charts. I don't think they're gonna dump more than this upcoming week. But if you wanted to for CRM, you could probably actually add give yourself an extra week maybe. But yeah, so I would be looking at, let's see what the price targets were again. 235, 229. And it's at where right now? 242. Okay. So if we look at volume, open interest, and stuff like that, it's bid spreads are kind of wide. You see most of the volume open interest is on the call side. That's why I was like, mark the high and low. It could go, um, it could go up. But I would say more than likely, maybe the 240 or 235 contracts. All right. Let's look at July 2nd. Yeah, it's kind of mostly low volume. And that's why I said it might just dump Monday if at all and then recover. So I would look at the 235 and 240 contracts and look at it more as a day trade for this one. Now, at the start of the month, it's probably going to be more trades and stuff and things to look at. But this last week of the month, probably going to be very weak. Next would be HD calls. HD. Boom. Y'all know the drill. Finna draw the broad information. I'm looking at calls, so I'm thinking like, all right, if it reverses from right here, this would be the bottom of the broad information, possibly. You don't know it's the bottom until it's reversed. Remember, you don't know until it reversed. That's how you can figure out what the top of the broad information is. You know it's the top when it reverses. So you can draw back from here. This is gonna be very steep. Let me draw back to there. Yeah, because it's very steep. Previous bottom was right here. So previous bottom, come up, drop. If it reverses, this would be the new bottom. And then it's gonna probably go and try and create a better top. And so I'm looking at for a two down, 2 up reversal on a week. This upcoming week, if the volume is trash, it might be an inside week. Go down to the daily. The daily, same thing, 2 up, 2 down reversal. Boom. So let me edit that. Entry week. Entry daily. So boom, and then you would just start marking your price targets, which this is basically like a pivot machine gun back to the upside. But I'll give you the one price target on the week. So this would be your first price target on the weekly time frame. Now, if this break in the direction actually breaks strong, don't let it break in and don't go. If it don't go, man, don't even cut it. Don't even worry about it. Like if you end up hopping in, cut it. Because like Rob said, these things should just go. So the first price target be 312. Second price target be 321. And I ain't gonna mark any more than that. And then, like I said, on the daily time frame, you can mark, these candles in between back to the upside, right? And like, a pivot machine gun is 5 or more pivots. And as you can see, this is one pivot, two pivot. If I was marking one pivot, let me zoom in closer. One pivot, two pivot, three pivot, four pivot, five pivot, six pivot, seven pivot, eight pivot, nine pivot. So it got a pivot machine gun back to the upside. All right. So that's why this trade would be a potentially good trade if it reverses. So let's go down to the 4 hour, see if there's a one or something there. Boom, on your 1 hour, on your 4 hour, it already did the 2 down, 2 up reversal. So for this, the reversal, like I said, it's 2 down, 2 up. So I'm looking for the bullish reversal. 2 down, the entry is the top of it. The target is the next candle. So if the entry was right here, the first target, if I would have got in on the 4 hour, would be this one. This 304, 305. You can see, if you can even see this combo. But yeah, so that's how you do it. So don't never let the lines and stuff confuse you, right? So the entry would have been right here. Let me move this around. Hopefully this video ain't too end up being too long. So boom, move that. So if you was playing the reversal on the 4 hour, like I said, for the 2 up, 2 down reversal, the entry is the top of the candle. The first target or first magnitude pivot is right here. All right. So that's what this paper is showing you. So let me just mark it. Oops. Oopsie daisy. I ain't do it right. Wrong drawn tool. Boom. Entry. Target. So let me edit it. I'm just gonna make it blue for the entry. And then edit property green for the target. So bro, this stuff be annoying. So as y'all can see, the blue line is the entry. The green line is the target. And that's what this is right here. 2-2 on reversal bullish. Entry, target. Blue line, entry, green line, target. Boom. That's how it's supposed to be. Remove draw. And then if we go down to the 1 hour. Ooh, this video feel like it's gonna be long. On the 1 hour, it looked like it could do a put. So, if you wanted to market, maybe it ends up being puts on Monday for HD. It like to dump and it's been going down. So this, for all we know, could have been a TTO to the upside. It might have just been trying to fill this gap before trying to go to the downside. So if you was looking for entries for puts, here's your entries for puts. Mark that, what I'm saying? Like I said, no bias here. We don't have bias. Because like I said, on the weekly, you don't know it's the broad information until it's reversed. So for all we know, the next candle could be another 2 down. You don't know it's the bottom. I drew it like it's the bottom because I think it may reverse. You don't know it's the bottom until it reverses. Next week, it can go lower. You see what I'm saying? So this is a hypothesis. That's why we don't do anything until it actually happens. All right. That's why we mark the high and the low and stuff like that, because we don't have any bias. But if I was doing calls on HD, with, let me see, what was my targets? my second price target be 320, it probably would be like 315 calls or something like that. And I probably would get this like a couple weeks out. If not, I'll probably try and get the July 16th contract for HD. And as you can see right here, look at it for calls, 11,000 open interest for the 330 calls. You see what I'm saying? Let's see what July 25th looking like. So as you can see, the open interest and volume for puts would be 297.5. And then over here on the call side, you got some open interest on the 310, 315, 325. If I had to pick a contract, I'm either going, like I said, 310 or 315, but I wouldn't do a weekly trade. I would be at least looking for July 2nd and up. See what the open interest and volume is. The volume and open interest on that is ugly. Let's do July 9th. Oh yeah, the volume. So the only ones that have good volume is the July 16th and June 25th. So if you're gonna pick a contract, do June 25th or July 16th. If you do June 25th, look at the 310. Do 310. If you do July 16th, look at either here 310 or 330. Because those are the ones. Well, you could do 310, 315, 320, or 330. But I would say probably the best one, the median, 315 and 330. All right. So those are your expirations you can choose between. So either June 25th or July 16th, because the volume on the contracts on July 2nd and July 9th are trash right now. Trash. Remember, it resets every day, but for right now, it's trash. So yeah. And then the next one, we're gonna do Chewy. Boom. On the weekly chart, I'm looking at a 2 down, 2 up reverse. Remember, this one broke the low, so it's a 2 down, and it's bullish. So bullish 2 down. So if my entry be the top of this candle. So let me go ahead and mark that. Oops. Edit property. Entry. Week. I might end up having some more, and I might just put, you know what I'm saying, some more on my watch list in the community, because this video feeling like it's gonna be long, and I'd rather just, you know what I'm saying, let y'all figure out the other ones. You know what I'm saying, yourself, and chart it yourself. First price target week. Then the next one, I'll say right here. And like I said, when it comes to choosing contracts, if it's something that you know is gonna go, and it's on a weekly time frame, you're looking at, 2-3 week out. And like I said, if you can afford the monthly contract, which the monthly contracts are the contracts that's on the third Friday. The third Friday of the upcoming month, July the 16th. For August, it's the 20th. You know what I'm saying? Use your calendar. Those are the monthly contracts. They end up having the most volume and open interest. So boom. Then we go down to the daily, see what type of signal we got there. What we got? We got a hammer. So boom, the entry for the week is the same for the daily. All right. So now let me go back to the week, draw our broad information. So you know this the bottom. Why? How do you know it's the bottom? Because it reversed. All right. It reversed. That's how you know it reversed, went to the upside. So here's your bottom. Boom, it took out that low. This is the pivot it took out. So price went up, came back, took out one side of the range. Now it's trying to come back and take out the other side. The high, boom, previous high. So boom, here's your broad information. Now we're looking to establish a new high or establish a shorter high up in here and have a lower broad information. All right. So now we go to the 4 hour. Oh, on the 4 hour, looky here. We have an actionable signal. We have an inside candle. That's a hammer. Boom, here's your earlier entry. Let me click on that. Edit the properties. Entry, 4-hour. Oops, 4-hour. Boom. Like I said, mark the high and the low. For all we know, it could come through here and start breaking and go to the downside. And these are a bunch of tight, close pivots. So this is almost like a pivot machine gun to the downside, but it needs one more pivot to be a machine gun. Right now, it's only 4. So, boom. There's your earlier entry on the 4-hour. Let's look at the 1-hour. What the 1-hour got? Let's see what we got. Your 1-hour already did your 2 down, 2 up reversal. So you got your daily entry. And then you got your 4-hour entry. Pull it. Boom. So as you can see, well, was it a daily entry? Oh, your daily and your weekly entry are the same entry. So boom, you got your earlier entry on the 4-hour. Boom, there you go, guys. Actionable signal. Boom. So if it breaks 78.58, boom, then you can start a position on 4-hour, and then once it hit the weekly, you can add to it, and then boom. You know what I'm saying? There you go. So that's Chewy. I would be looking at, so 80, 84. I would be looking at try to do, July 16th. Boom, look at all this volume. Look at that. Beautiful, beautiful. Channel my inner Michael Crow. It's beautiful, easy money. Anyways, so I would be looking at, I would say, because this has so much volume, open interest, I would say 80, 85, and maybe 90. Any one of those. You know what I'm saying? The 90 look like it might give you your best bang for your buck. If I click analyze, even though I didn't set a price target for 90, let me send it over to the analyze tab. Let me go back to the chart, go back to the weekly. So 90 would be like up in here. So, let's just say, let's just do this upcoming week on the analyze. Let's say it hits, let's say by Wednesday, this contract hits. Let's say it hits at least 82. Let's just say it hits 82 or something like that, right? $82 by Wednesday. You'll be up $50 on the contract. And that contract is basically $1 if you buy it. So that's 50% on Wednesday. And then if you hold it and then the next week it go up even more, let's say it hit 85 that following Wednesday or 86 or something like that. Let's see, 86. Boom, look at you. 110, you know what I'm saying? You see what I'm saying? That's 100% right there. So that's a good contract. Or look at June 25th. Oh shit. I mean, my bad for cussing. The 80 calls for June 25th. Look at it. 10-cent bid ask. Let's look at July 2nd, see if there's any volume here. There's some volume. Look like I said, looks like it's either June 25th or July 16th. So if you go 80, let's analyze this one. Single. Let's say the 23rd, it hits 82. That's 170. So that's 100%. A little over 100%, probably 110% on this contract. If it hits 82 Wednesday, you know what I'm saying? Let's see if it hits a Thursday. Still almost 100%. Well, still like near 100%, like 95, 90. See what I'm saying? So boom. So 90 contract for July 16th, or 80 contract for June 25th. Okay. That's Chewy. Let me slide in Etsy. Etsy. First thing do, draw broad information. Boom, that looks like the bottom. Oops. Boom, this looks like the top. Boom. Which is kind of like, look like it's almost like stuck in a range. Etsy could probably be inside month. Yep, I knew it. Inside month. Next month might be bullish. So this might be a July 16th type contract or deal. So the week it did a 2 down. So we'd be looking at a 2 down, 2 up reversal. All right, so mark the top. And the price targets look like it's probably gonna have to be marked on the daily because that big red candle entry. Week. Well, I would say you can make this a price target and then this one a price target. But it looked like it might take a while before you get up there. First PT week. Oh, boom. Second PT week. Boy, this video feel like it's long. Oh my gosh, I need to hurry up. This is the last one, y'all, man. I promise, because anything else I figure out, I'll just send it to y'all. So boom, you also have this gap fill to 181. And then boom, look at that. Look at that actionable signal on the daily. Look at that. So you got your weekly entry. Your daily entry is like right below that. Boom. And maybe this actionable signal on the daily, even though it looks like it just be a 212 continuation, it'll trigger your weekly reversal. Boom. All right. And then go down to the 4-hour. And then boom, look at that. Look at that beautiful hammer on the 4-hour. Look at that inside candle. Look at that. There's your earlier entry. And this is actually a 2-1-2 reversal because this is a 2 down. All right. Oops, I didn't do that right. Let me just activate. Boom. And then that's your earlier entry. Boom, look at that. And then I wouldn't be surprised if there was an inside hour. No, it looked like that. This last hour might have been like a 2 down or 2 up. Boom, you already got your 2 up, 2 down, 2 up reversal on the 1 hour. So boom. So with the first price target being 176, you know, like I said, you can look at this. You can it look like it's June 25. But this one don't really got two. Let's look at it. See. Week. So June 25th. You could be looking at the 175 calls, 15-cent bid ass spread, which ain't bad because this one's horrible. Oh my Lord. Or you can try the 180, but chance to do that in 1 week, I don't know. All right, let me go back to the 4-hour. Yeah, because the gap fill is up to 181. So I mean, it very well could run high low from this day. So Etsy can move. What is that? $13. If you look at the high low up there by the 169, it can move $13. So $13 from 179 is 181. So yeah, if it can move $13 and fill that gap, I mean, that would put this one in the money. Uh, I mean, if you wanted to lotto, this is what they call a lotto trade right here. If you said if I got $100 to just throw at some 115, let me send this. Let's just say Etsy Tuesday or something does it. Analyze by single. Again, I am not a financial advisor. This is for educational purposes only. Blah 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 blah. All right. So let's just say Tuesday Etsy runs $13 or something like that and hits 181. This contract would be basically a 200% contract. Well, no, technically almost 300% because it's almost $300. So $100, $300 profit would means you bought it at 115 or $1, and then you sold it at $4. That's a 300% return. And then let's also analyze the July 16 contract with something that got high open interest volume. It looks like it's the 170 one that has the most. And that's worth a lot of money. Let's just say you went with this one because it has a lot of open interest, the 195. Let me go to charts. Where would it have to go for it to hit 195? All right, so it would have to hit here. So if it hit your second price target, let's just say it hit this, because Etsy can really move when it gets some volume. Let's say it hits that in about 2 weeks. So 2 weeks. So let's say it hits it by, let's say Wednesday, July 7th. We'll take to analyze that contract if this went to 195 by July 7th. So just, what I'm saying, throw something out there if it took a couple weeks to get there. July 7th. So if it hit 195, I might have to 195 July 7th. That'd be $312. It cost, I mean, you probably pay like 145, 150 for it. So 300, what is that? And this is why you look at this stuff to see what's the risk to reward ratio. 319 at the price of 150. That's basically 200% right there, because that's 150 2 times to form 300. So when you went to sell the contract, this contract's value would be, if you bought at 150 and it has 319 profit, you would be selling it at, let's just say 300 profit. You would be selling it for 4.5. So basically like right up in here, 10 cents more than this asked, right? So that's, like I said, 200%. So that's your trade ideas video, all right? Like I said, remember, when you're looking at your broad informations, look for a high and then where it reversed. So it went up here, reversed. Where you low, touchdown, start trying to go back to the other side. That's a reversal. So boom, that's how you know you got a bottom. All right. Where it's kind of like a wide bottom, not just like, oh, it went down right here, reverse and went up. So I draw it right here. I mean, on a lower time frame, maybe an hour or something like that, you might have a broad information in here, because a 3 on a lower time frame is a broad information. But just, you know what I'm saying, it'll look right to your eye. All right. So remember, it's just getting your eyes used to seeing price. Doesn't go straight up, it doesn't go straight down, but also support and resistance isn't horizontal. All right. So thank you guys. This is your video. Let me know what you think. Also, if you want, ask me questions or stuff like that, follow me on Instagram. My Instagram, I'll type it right here, Ray Gentsman. All right. I'll probably put in the whatchamacallit. So Ray Gentsman, Instagram, follow me. All right. We outie.